What is going on? Welcome back to Trading Options Network. Now, before we go ahead and get into everything, let's go ahead and get the disclaimer out of the way. As always, everything we discuss is solely my opinion, not the opinion of Trading Options Network, to do with the information which will, but take responsibility for your actions. And also be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with everything that is Trading Options Network. That being said, let's get into it. All right, so as you know, yesterday we discussed that we were going to have the retail sales numbers and the unemployment claims coming out today, and obviously that had happened. And I just want to go ahead and take a look at it really quick. So, as you can see, our retail sales came in way higher than expected. A lot of, I was looking a little bit at, what some articles were saying, and the main reason as to why, from what I was seeing, the general consensus as to why the retail sales are so high is because gas prices are so low, or have been lowered, I should say. I wouldn't go as far as saying they're so low, but nonetheless, gas prices have come down a little bit, and therefore they feel like that has caused there to be more retail spending at bars and restaurants and clothing stores and things like that. So personally, I don't really have a response to that. It seems a little bit silly to me. I mean, I know a lot of people right now are struggling, of course, with the unemployment claims being lowered, and there's a lot less people being laid off. That is a quote-unquote sign that we have a strong labor force as well. But in reality, I mean, I think it's just a lot of people that are having to work extra and maybe picking up a second job. And I think there's a lot of that's going on as well. So while the numbers overall, are good, again, I mean, we got to keep in mind that we're in a pretty crazy time where things are super, super expensive. It's harder and harder for people to stay afloat and pay their bills and things like that. So I think these numbers are slightly skewed in that general sense. I mean, I would argue more or less that because gas was down, people were able to actually buy more groceries, truth be told. I don't think people are going out and say, oh, hey, gas is down 25 cents a gallon or 50 cents a gallon. Let's go out to eat. I don't see a lot of that. Personally, I know a lot of people are still really trying to save money. And, again, I think the fact that, if it is because of the lower gas prices that we're seeing this higher spending, I think it's mainly because people have the money to actually get the necessities that they actually need. So, but again, I mean, that's just my opinion. It's just my opinion. By no means am I an economist or anything along those lines. I don't study that like I study charts and technical analysis. But, again, that's just my personal opinion. Unemployment claims, again, unemployment claims are down. And there could be multiple reasons for that. I mean, again, I know a lot of people are having to pick up multiple jobs right now. And it's unfortunate. I think that has a little bit to do with it. I think people are actually willing to take less than what they're, worth. So I think that has a lot to do with it as well, in terms of the unemployment claims being down. I think we are literally blowing up a bubble that is going to burst, and the bigger we get, the harder we fall. But until that actually happens, we can still make money. That's the great thing. Excuse me. That is the great thing about trading options and being a trader, is we can still make money. And hopefully when that bubble does ultimately burst, and I promise you it will, it might be next month after the elections, or it might be next year at a random time. We don't know. But I feel like it's going to happen. All right, so let's move on. Pretty much in terms of companies that are green and red, it's pretty much 50-50. A lot of the bigger companies, NVIDIA, Microsoft, Apple, Amazon, Broadcom. I always forget that AVGO is Broadcom because it just doesn't sound right. But a lot of green there, the bigger companies. A lot of red in the smaller companies. Let's take a look at the charts. All right, so the charts are saying that, hey, we gapped up. We set a new all-time high today. Again, nothing different. It seems to be happening pretty much every day. But we have been kind of selling off most of the day. And if we look at the equal weight, pretty much the exact same thing. We gapped up and we've been selling off. Now, what does this mean? Does it mean we're going to be pulling back a little bit? Well, it could. Does it mean, we're just taking a day off? I mean, it could. Does it mean people don't like the financial data that came out? It could. I mean, again, we don't necessarily know exactly the exact reason as to why it gapped up and it's selling off. We don't know the exact reason. My guess is it'd be kind of a combination of all those things. But of course, the financial data that was released. Sorry, I'm on 4 hours of sleep. I stayed up a little bit later than I probably should have last night, but still gotta grind. The financial data that did come out is good in terms of, when we're looking at the market. That's good data. Now, again, maybe a lot of people think, the same way I'm feeling about it is that, hey, it's good, but what's the truth behind that? Why is it, why are those numbers coming out the way they are? And maybe people aren't trusting the numbers as much as they could. I don't really have anything else in regards to the market right now. I mean, it's pretty much doing exactly what I was feeling it was going to be doing. I've been saying since the end of, mid-September, end of September, that I don't see us doing much until the election. And yeah, we've had a little bit higher of a rally, a little bit of a poke up here. It's not like taking off by any means. I mean, we are up, 2% in almost a month. I mean, that's nothing to be, go crazy over. It's not bad. It's not bad at all. I mean, I said I think we're going to be slightly bullish up until the election, and that's exactly what's happening. But that being said, let's kind of give a little bit of a look at our positions. Of course, I did go ahead and open up that SYY position after all, so we'll go ahead and throw that on there. We can take it off of our bear watch list. Got the hiccups now. Go figure. It's like everything right now. Anyways. All right, let's take a look at the positions. Cisco, we bought this morning. We're down a little bit, but, if we go ahead and take a look at the chart here, it bounced off of that 50-day the other day. Yesterday, it gapped down, but, people bought into it again. So we didn't open it yesterday, but it opened today, did gap up, and then it started selling off. So when it started selling off at that 20-day moving average, I thought that was going to be a pretty good buy-in. I probably got in right around where it's at right now, maybe even slightly lower because it did sell off quite a bit early in the morning. Go ahead and look at the 1-minute chart. As you can see, it sold off right away. So I think I got in right around in here somewhere. And it's pretty much, gone sideways for the most part the rest of the day. And again, I'm not too worried about that. Gosh, I hate it when it does this. Let's go ahead and fix this back to 10. Apply, okay. All right. So if we look at this chart here, this is definitely a reversal signal, okay? We got our doji candle there the other day. Wasn't confirmation yesterday, but we did get rejected at that 20-day. And then, of course, today, slight gap up, but has been pretty much selling off. So, I mean, that's definitely, a sign that we could potentially go lower. And my goal is only to get down to about the previous lows. And we have some support here. So if we can get down to around $74, I'll probably close a position. I don't plan on being in this position very long. If we go ahead and take a look at Cisco. Let's pull it up here on the charts. SYY. You always, especially there's 4 times per year. You got to be careful. Earnings is October 29th, so we got 12 days. That's 12 calendar days, of course. So if we have 12, there we go. 12 calendar days until earnings. There we go. I don't want to hold this through earnings. I might hold it up until earnings if it does go down, because with earnings coming up, that just means the volatility the IV, I should say, is going to cause premiums to go up a little bit more as well. So, that might be a reason to hold it a little bit longer if it does, in fact, start moving downwards. But again, I mean, if it starts moving up, obviously we're going to go ahead and close this position. And if it moves down significantly and it breaks, if it breaks through that support here, then we'll probably put on some kind of trailing stop loss. But until that happens, we're just going to hold and see what happens. ExxonMobil, still kind of just teetering around that 20-day moving average since we got that bad news. I forget exactly what it was, something about, I think it was Saudi Arabia and some gas news, and it was going to make it harder for us to get more gas. I don't remember exactly what the news was, but, again, the news was bad the other day and it caused it to gap down. But as you can see, the 20-day is acting as pretty strong support. Not to mention we have all this right here. This is a lot of support, okay? So let's go ahead and take a look at ExxonMobil. We have 29 days till our long legs expire. We have 8 days till our short legs expire. So that's great. I mean, we're pretty much, I wouldn't say we're guaranteed to get full profit on the 125 calls that we sold, the short legs that we sold. But I don't see us going over 125 in the next 8 days. That's all the way up here. So we'd have to really kind of rally a little bit. Now, it could totally happen. Look what happened here. I mean, obviously it rallied big right there. If it does happen, that's going to be great for us. If it does get up to 125, and if we, blow through 125, then we'll probably close the position completely. Best case scenario is it starts moving up, and a week from Friday on the short leg expiration, we're finishing right at about 125, and then we can decide on maybe holding all or some of the longer legs and see if it continues running up. So that's it for ExxonMobil. I'm not going to close this position yet. It's still in a good spot. I mean, I could even argue that this is just nothing more than a bull pennant. I mean, I could draw a triangle right here, right? If you can see that. Draw a triangle right there after this big sharp jump. And even with the bad news that came out, this is still creating a bull pennant. So it's still a bullish chart. So until it breaks down, and I should say if it were to break down, we're not going to go ahead and get rid of this position yet. We're just going to have to hold on and, wait for it to move up again. MasterCard. So MasterCard, obviously, is way higher than 505. And as of right now, if we go ahead and look at where we're at in terms of profit and everything, we are up just under $900 in profit on this trade. Don't even worry about I wish I could have like a portfolio percentage. Maybe I can. Maybe I'll look in the settings and see if I can put that on here somehow, if that's a possibility to put portfolio percentage, because if I'll just round it up to $1,000. If it was $1,000, that's only 0.3% of the portfolio. So very, very small amount. If you were looking at a, $1,000 account, that's only $3. Okay. So, don't take a look, don't focus so much on that number, the $900. Focus more on the portfolio percentage. It's going to be about 0.3%. So it's nothing crazy. But the great thing about MasterCard, if we go ahead and look at this chart, we had the diagonal spread. We had the 505s. The 505s were the short leg, which is right about here. So best case scenario, believe it or not, even though this is a bullish position, we're in a bullish position. Best case scenario is it actually pulls back a little bit closer to that 505 level tomorrow. And if that were to happen, then what's going to ultimately happen for us is right now the short calls. I'm sorry. I was looking at the wrong things. I'm sorry. So the short calls, which again they expire tomorrow, are currently valued at $8.75. Okay. So again, if we round that to $9 times 8, which is dropped closer down to $8. So let's pretend it's $8. That's $6,400 in value that we will gain from the stock price actually moving down to 505. Now, what would we lose approximately on here? Well, if we want to get it at, a good idea of where we will be, we'll actually have to go to here. Let's see. So we have our 500s right there, our calls. Delta is 70 cents. Okay. Now, obviously, it's going to change. But, if we were to get closer to 505, this is going to obviously get lower and lower and lower. Okay. But even if we stayed at 70 cents the entire time it dropped down to 505, and it wouldn't happen. It'd probably average around 60 to 62 cents if we were to average it out. But even if the delta stayed at 70 cents, that would tell us that we would lose about $5,600 in value in these legs. So now it's at 9. So we would gain $7,200 here, lose $56 here. So that's $1,600 that additional that we would gain if it drops to 505 tomorrow. This is a bull position. This is one of the reasons why I like diagonals so much, because even if it does blow through your short leg, if it does pull back, and once we get to that point, it could literally do three things, and we'd still be profitable in all three things. It can continue moving up, which, believe it or not, would actually be the last thing we would want. It could start moving sideways, or it can pull back a little bit. And no matter what, we're pretty much going to be profitable in any scenario. The only way we could possibly not be profitable with our MasterCard trade is if the stock absolutely plummets overnight, like if it were to have earnings. Now, it doesn't have earnings, but if it were to have earnings or something, and this is one of the reasons why I don't like to play earnings, and it gapped down to say, $4.95. That would hurt us. That would hurt us a lot. Obviously, I don't think that's going to happen unless something crazy happens overnight. Or the only other option is the 505s do expire and we hold the 500s, and then the 500s start plummeting, and then we lose the value there when we could have sold it while it was high. So it's all management. That's all it is. Trading is a lot of management. Good old How I Met Your Mother. I love it. Love it. I don't know why I call it How I Met Your Mother, but I love it. Look at this one, kicking butt right now. It is up. I mean, we're doing really well on that one right now. We are up $1,700 overall, so that is, what about 0.7% of our portfolio? So you have a 0.7% gain on there, on that one. Up nicely today, so it's looking great. Philip Morris. Why does it keep going there? Oh, because I keep clicking on trade. That's why. Pardon me. Philip Morris. Now it is starting to do what I was hoping it was going to do. And that is pull back. Remember, if you recall, I said yesterday the Bollinger Bands are getting tighter. So we should expect it to move one way or the other soon. And it did. It does look like it is rejecting off that 50-day moving average, which is what I was hoping it was going to do. And I mentioned that yesterday. It was probably either going to be rejected or it'll break through today. And, hopefully what this is doing is it is creating or showing what the next move is going to be. Especially, let me just zoom in a little bit more here, especially if it closes below the 20-day. That'll be very, very good for us. So I like where Philip Morris is, and we're starting to catch back up in that trade. And then finally, TDS. So TDS, Telephone Data Systems, down a little bit today, but that was the similar to Philip Morris. It was stuck in this rut here for a while, okay, that we were in, and finally broke out. Now it's having, kind of a, I'm not even going to say this is a pullback. I could see this actually just going straight, or neutral for, a couple days. not really going anywhere, not pulling back, but not going up either. And then it's going to have the 20 and the 50-day catch up to the stock price and then go to another high. So I'm expecting like a high base, bull flag type position or chart, and then continue to move higher. So I really like where TDS is at, Telephone Data Systems. Again, we went from like down 3,000 to up 900 because it never broke through any support there. Any support. Man, I'm tired. But I'm getting through this, guys. I'm getting through this. And hopefully I'm keeping you engaged as well. But yeah, I mean, we don't really have, I didn't really, since I was so busy yesterday, I didn't have really a chance to do any screening or anything. So I didn't get a stock of the day yesterday. I will get one today. Don't worry about that. However, I did have a tip of the day yesterday. And again, I was busy. So if you did see my tip of the day, you saw that I was in my car. I was on my way somewhere. But my tip of the day was you have to be a consistent trader. And let me just talk about this just a little bit really quick. What do I mean by being a consistent trader? I mean, there's a lot of different things. One, you have to be consistent in your strategy and your trading plan, and you have to focus on it, and you have to be consistent in how you trade. But that was not what my tip was referring to. Think of it like professional sports. NBA, NFL, NHL, they all have their preseasons. MLB has spring training. Why do these professional players have these preseasons? Well, it's obvious. They haven't played for a few months, so they're getting back into shape. Well, when you're a trader, if you stop trading for even a short period of time, you will get rusty. You will. And I was reflecting while I was driving yesterday, and I was thinking about the times when I was doing my worst trading, like when I was really struggling, and like, why was I struggling? And I realized the reason I was struggling so much is because, I was letting my emotions get into it. So that could be another tip of the day soon. In fact, I think I already did that one, but you know what? It wouldn't be a bad thing to reiterate. But, I remember a few different times where I had things were going well, and then suddenly something happened in the market and it completely, turned my portfolio on its side. And, what was a nice jump, suddenly I'm opening up to a loss, and, kind of got to me a little bit. And so I didn't trade for, a week and a half, 2 weeks. And then I come back, and then all I did was I made one, maybe two trades over the course of the following week or something like that. So I was, trading very, very minimally. And it's not because, I just decided I was going to hold cash. That's totally fine. It was literally because I just wasn't putting in the effort, staying sharp with everything. And then sure enough, those couple of trades didn't really go my way, or maybe just one went a little bit my way, but the other one completely, went the opposite direction I wanted to go. And ultimately I got a loss. So then I didn't trade again for a week. And then, so I was like trading and then not trading, and then trading and then not trading, and trading and not trading. It was very inconsistent. And ultimately, all I saw my account doing was taking steps down. And I didn't understand why at the time, but reflecting, it's because I wasn't being consistent. I wasn't looking at the markets. I wasn't studying the charts. I would just pop in and I would try and find a chart that I would randomly like, not really paying attention to anything else. And I was trying to make a trade and hoping that it was going to be a good trade for me. And that is not how you become a good, profitable trader. You can't. You have to be consistent. Now, that does not mean you have to make trades every day. You can absolutely 100% hold cash. Okay? But you have to continuously be looking for opportunities. And you have to continuously be studying the market. Okay? There's a lot of people out there that will tell you don't have to do that. And it's a bunch of bull crap. It really is. Now, day traders can maybe get away with it a little bit more, but I'm not a day trader. And the reason I say day traders can maybe get away with it a little bit more is because it is more risky. Day trading, in my opinion, is more risky than being a swing trader, which is more risky than being a long-term trader. The shorter the time frame, the riskier it is. But if you are a day trader, you can possibly get away with it a little bit more because, you're only holding on to trades for a few minutes and you basically ride waves throughout the day. And you don't really look at anything but the chart. Now, swing trading, like myself, and what a lot of traders are, there are a lot of so-called day traders out there. They're really not day traders. They're wannabe day traders. Oh man, LV down 12%. Wonder if they had their earnings today. I just saw that. Oh man, a lot of them are down big today. But anyways, I'm not going to get into another story. Or subject, I should say. There's a lot of people out there will tell you that, hey, you really don't have to put all that much time into it. And, you can make a ton of money and have all the freedom in the world and, trade wherever you want to trade. Technically, yeah, you can trade wherever you want to trade, but there's going to be work involved. Okay? Nobody's going to be coming on here. I don't care who you are and what they say. They're not going to just come on here and make a couple trades and then ignore it the rest of the day and then come back in a couple days and make a couple trades and ignore it the rest of the day and be profitable. They're just not. Even people that say that, I guarantee they're studying the market when the market's closed. Guarantee it. So you are going to have to put in some work. But again, that's what it takes to be successful in anything you do. Whether it's trading, business, even your job. Think of it. If you're not consistent at your job, they will fire you. Okay? There's no different. It's no different. But again, ultimately, my tip of the day was be consistent. Be a consistent trader. Okay? Again, that doesn't mean making trades every single day. It doesn't. Does not mean making trades every single day. It just means keeping your mind focused and always looking for opportunities. And if you do that and you put in the effort to learn how to trade, you will become a profitable trader. I can promise you. But that being said, that's all I have for you guys today. I hope you learned something. I still think this market is going to be going up slightly. It's going to be slightly bullish up until Election Day. And then, again, after Election Day, God only knows what's going to happen. But until that happens, I'm going to keep my position of being slightly bullish. All of our positions are looking pretty good right now. And we're up about 0.3% in our portfolio just today. So I like it. I like where we're at. But till tomorrow, hope you guys have a great rest of your afternoon. I will go ahead and get those tip of the day and stock of the day for tomorrow that we can talk about. And again, hope you guys have a great rest of the day. We'll talk to you tomorrow.